Welcome. Guerrilla Insight, Episode 4, The Dangers of Normalcy Bias. It's Wednesday, February the 7th, 2018. It's exactly 2 days since the market bloodbath on Monday. And I'm not going to bore you guys to death with all the details. We've already discussed so much of it already. But I do want to pull out a story. This was actually featured with our colleagues over at Zero Hedge, our partners, our comrades in crime and, and reporting of the truth. But the headline reads, XIV trader loses $4 million and 3 years of work overnight. Here is his story. And this right here is a perfect example of a normalcy bias. This is what people need to understand. Look, we are living in a fast-paced world. You cannot afford to sit and stay on one thing. You cannot sit and stay on one thing. Think about it for a second. We're living in such a dynamic, fast-paced world. You can't survive on one career anymore. You need to have multiples. You need to, there's a new trend happening where more and more adults are returning back to school in order to reinvent themselves over and over and over again. Some of the top experts in research has been saying that an adult might have multiple jobs throughout the course of his career, that the freelance worker is going to be the future, not the contractor is the future, not this guy who's the typical traditional W-2 earning employee who just sits around and doing the same thing year after year after year, hoping for a paycheck, and in the end of the day, when his term is done, some sort of a pension to take care of him. No, now the onus, in order for you to be successful and for you to thrive in this world, all the onus and the responsibility is up to you. You're the one who's going to have to get creative. You're the one that's got to develop the marketable skills. You are the one that has to constantly reinvent yourself in a dynamically different world. The game's changed. The game has changed. In the 40s and the 50s, the 60s, the 70s, the 80s, the 90s, even in the early aughts, a normalcy bias, you could survive. You could live very comfortably with a normalcy bias. It's 2018, and a normalcy bias will get you killed. It's 2018, and a normalcy bias will get you killed. I want you to think about that for 1 second. Think about that. The normalcy bias will get killed. Let's get into this article with this guy real quick. The devastating 90% overnight collapse in the now terminated XIV exchange traded note has had many casualties, from one hedge fund down as much as 65% to Morgan Stanley's formerly $39 million position, to Reddit user Lilkana, who posted, "I've lost 4 million USD, 3 years of work, and other people's money in trade XIV subreddit. 1.5 mil was capital I raised from investors who believed in me." This guy, Lil Kana, wrote, "I had leveraged position. I used DTBP to buy, and it was down like 1%. And I thought I could hold it, knowing that I would get a Reg T call deadline in 2 days." As confirmations of his woes, Lil Kana posted a screenshot of his depleted account. "The amount of money I was making was ludicrous. Could take out my folks and even extended family to nice dinners and stuff," he wrote. "Was planning to get a nice apartment and car to take my parents on a holiday, but now it's all gone. Sad thing is, I was long VIX until a couple of days ago. I was sure there was going to be a correction, but With each passing day, my conviction wavered. Stupid. Really effing stupid. I feel like such a fool. While some Redditors were supportive, emoting empathy, like, hey man, I know others have said it, but I'm here for you, man, one user wrote. It may seem like the end of the world, but tomorrow is a new day, another one said. Another Redditor just said, Jesus, dude, if you're able to turn 36K into 2.5 million, even with raised capital, you can make back all the money lost and then some, he said. You just have to learn from lessons and give it time, and you will make it back in no time. It sounds cliche as F, but you know it's true, unquote. User Asian here commiserated with Ilkana, writing, I feel you, as I've lost half of my net worth today, probably totaling 5 years of my life. For what it's worth, Lil Kana is able to take responsibility for his epic fail. He says, I guess you never expect it until it hits you. You always hear stories about how people get cancer and how people get randomly killed in the street, or about how they lose all their money, but sometimes you find it hard to believe that it will ever happen to you. I started with 50K and traded all the way to 4 mil over 2.5 years. Started using more and more margin. Started taking it less and less seriously. What could go wrong? Arrogance, stupidity. Oh, well, thanks for the kind words, though. They are more comforting than you realize. Credit Suisse's XIV issuer announced this morning that February the 20th will be the last day of trading before its termination. So here's a young guy who basically took his money as well as other people's money who, quote unquote, believed in him, and was able to get his account as much as $4 million. And he was trading it. I mean, my God, he's trading the XIV. What could possibly go wrong? It's the inverse VIX. What could possibly go wrong? Everything is hunky-dory. What could possibly go wrong? Year after year, day after day, week after week, for 3 years. 3 years, his senses began to dull. In 3 years, at a daily trades, over 1,000 days of his life, his senses were beginning to dull, and he set into a very, very complacent normalcy bias. After all, what could go wrong? What could go wrong? I started with 50K and traded all the way to $4 million. Started using more and more margin. And as every day passed by, folks, he says, quote, I started taking it less and less seriously. What could go wrong? And what could go wrong is that because he thinks that he's found an exploit, people who've become complacent, people who become victims to a normalcy bias, are every single time those who are always over smart. Yeah, you know who you are. You're over smart. You're the guy or gal that's got it all figured out. You're the one who's going to go all in on that one stock. You're the one that's going to go all in on that one asset. You're not going to take profit. You're just going to hold on to it for dear life. You're going to hold them. You're not going to listen to nobody. Maybe your own senses would tell you, maybe you should diversify. Maybe you should do as much research as possible. Look at the leverages. Maybe, just maybe you shouldn't put it all in. But you see, every single person I've met with a normalcy bias is somebody who's over smart. And over smart people tend to be the victims of happenstance. Over smart people are people that tend to be abused, used, and thrown away by the system. Why? Because they delude themselves. They set it and forget it. It's okay. This is a good position. Like he's exploited some loophole. Like he's found that one golden BB. Think about it, folks. Years ago, decades ago, you could hold that one stock. Oh my God. I mean, 40, 30 years ago, oh, I have a stock in GE. I have a stock in Ford. Decades ago, folks. Oh, I own stock. I own shares in GM. That was that blue chip. Oh my God. As long as I have that, I'm fine. Normalcy bias in 2018 will get you killed. What happened with all those auto workers who worked day in and day out, clocked in 50, 60, 70 hours a week, was paid out the overtime, got the full medical benefits. They had a fat pension. They had a 401k. They had retirement accounts, and they had shares in GM. They had shares in Chrysler. What happened come 2008? Many of them were laid off. They lost everything. Their 401k became a 101k. Their GM stock was worthless, an absolute dumping, the likes of which we've never seen. Same for Chrysler. They got sold off. They got shotgun merged with Fiat. Fix it again, Tony. They got shotgun merged, and then what happened? They lost everything. Normalcy bias. All their eggs in one basket. I got all my eggs with GM. I got all my eggs with Chrysler. I got all my eggs in XIV. I have all my eggs in gold. I have all my eggs in silver. You know what I love about cryptos? This is what I love about cryptos. You actually got to do some homework. You actually got to do some thinking. You actually got to do some research. You have to get off your lazy ass and actually do something. Oh, yeah. Oh, yeah. Because cryptos makes you know why most people don't invest in cryptos? Because you can't be over smart. You can't be over smart. It's not like stock. There's no stock broker taking care of this for you. Oh, my Schwab broker, he takes care of that for me. Oh, yes. My Morgan Stanley broker, he handles that for me. Laissez-faire attitudes will get you killed in 2018. Laissez-faire attitudes is the normalcy bias. It's the normalcy bias. That's the lesson, if you folks want to extract from this whole entire thing, is that there is no safety in normalcy. Be abnormal. Be abnormal. Be contra indicative, contrarian, contrarian. Be those things. Look at it from an opposite light. Do the research. Get smart. And you want to learn how to do it, thecryptoschool.io. I'm going to plug it. Why? It's my school. I love it. I've helped create it with Frank. An amazing team over there. Amazing team. Educate yourself. Whether you go with us or somebody else, I don't care, but just educate yourself. You can't afford to be normal. You can't afford to have a normalcy bias. That will get you killed in 2018. The next bit of news that I'll touch upon real quick is this, oh, Bank of America, oh, JP Morgan, oh, Lloyd's Bank. They don't want you using credit cards. They didn't say nothing about debit cards. They don't want you using credit cards in order to get crypto. Why is that? Folks, if you know anything about me, you would know how the credit card system works. First and foremost, it's your money. Credit card debt is created, or credit card money that is lent to you, credit is lent to you using your social security number, which has its own monetary value. The banks borrow against that monetary value of your social security number. It's financialized, and then it's loaned out to you. It's your friggin' money, and it's a portion that's loaned out to you, not the full amount. Then they hit you with penalties and interest if you don't pay on time. And then they hit you with collection notices when you default. And on top of that, they take insurance against you that when you do default, it's called a credit default swap. So when you do default, the credit card companies get paid anyway. So how come they don't want you using credit, your own funds, to buy crypto? Because you're leveraging something for the heap. See, most credit cards are bought, credit cards are used to buy useless junk. Useless junk. They don't care about that. They care about the fact that you can use your credit line that you have and buy cryptos and play cryptos and have this wonderful leverage and arbitrage that you could become fantastically wealthy if you know how to play the game. It becomes your own margin call. And that's something that they don't want. That's something that they don't want. That's what the news is. So use your debit card. Use other ways. Figure it out. Figure it out. Find a credit card company that will. So far, I've heard Capital One ain't got no problems. Check out Capital One. Check out TD Bank is still allowing crypto purchases. You can check those guys out. There's no problems there. But that's what I'm talking about, folks. That's what I'm talking about. 2018 is an interesting year. 2018, it truly is an interesting year. And no matter what happens, a normalcy bias will get you killed. This is the Guerrilla. Over and out.